Welcome, ladies and gentlemen, to Commodity TV and the Zurich Invest event, and also later the Zurich Invest night. And we have here now the fourth largest royalty company, gold royalty company in the world, Osisko Gold Royalties, and Sandeep Singh, the CEO, is here with us. Sandeep, good morning. How are you?
Great to see you again, Jochen.
Yeah, great to see you. Thanks for taking the time. And yeah, you're also participating, of course, tonight. I think we are on the panel together, aren't we?
Yeah. You can do this. You can do this again tonight. So this is a good trial run.
Yeah, that's fantastic. Royalties. I mean, we all know what royalties, how they work and how they do. But I must say the performance of your stock of the last 6 to 9 months was really outstanding. And I'm one of the shareholders, so I'm totally happy. Will it be sustainable?
Well, I'm a shareholder as well, so I'm quite happy. Look, I think it is. We've had a good run, a good move, but really it's just been a bit of catch up. You know, the base was so low for really reasons that didn't make any sense. So frankly, given the asset quality that we have and the level of catalyst in our company, we still feel like we have a lot of room to grow. And when you just look at the larger peers in our sector trading at well north of 2 times NAV, we're certainly not satisfied with the slightly above NAV multiple that we've landed on. But I do think it's turning around, and I think the hard work that we've been doing over the last 3 years to kind of simplify the business, get into the kind of pure play royalty model, all of that is now starting to pay benefits a little bit.
Absolutely. And I think the gold price is working in our favor. Yeah, now 2015, 2020, that looks good.
Yeah, that doesn't hurt at all. I think, we spent a lot of last year kind of scratching our heads, answering questions from investors as to why gold wasn't doing better. I know you and I had the conversation that gold actually did quite fine last year in terms of all the headwinds that it had, in terms of rising rates, sharply rising rates, very strong US dollar. But frankly, all those headwinds are now turning into tailwinds. They're now pushing the gold price up. And I think, we certainly feel like we've gotten at the top end of rate increases, whether there's another small blip there by the US Fed or by central banks in general, I don't think really matters in people's minds anymore. And I think we're going to have to ride the roller coaster all the way back down in terms of rates, which should do quite well for gold. And, generally speaking, I would say the outlook that's shaping up for us as a royalty company, as a gold royalty company, couldn't be better. Where inflation still feels sticky in certainly the 3 to 4% range in the longer term, where growth is challenged, it's recession talk, it's contraction talk, and now all the things we've talked about that you and I have talked about in terms of the strains that implies on the global economy, and then now particularly in the financial sector. It's not every day that a 150-year-old bank, 150-year-old Swiss bank goes away. I think all those cracks are starting to appear, and I think the stagflationary environment for gold, everything I just talked about, couldn't be shaping up better.
Super. As we know, you are super strong positioned with your gold royalty business. Yeah, that is really a great cash cow and really working extremely well and has a great growth path in front of it. So I was just interviewing Keith Newmeyer from First Majestic, and we were talking about silver. And he's as bullish on silver as I am. What is your take on silver on the one hand, and on the other hand, do you see maybe an uptake in the future silver streaming business, for example, which you are also doing?
Yeah, look, we have a significant amount of silver ourselves. We're quite bullish on it. I like both commodities. I like the outlook for both. Obviously, silver is a smaller subgroup, so when it moves, it can move quite sharply. We're actually rooting for Keith. We've got exposure to the Ermitaño mine, which seems to be doing really, really well in Mexico. So no, look, we're quite bullish. Our company, as you know, Jochen, is about 70% gold, 20% silver, 10% in the other category made up of base metals and copper mainly. So that 20% silver is important to us. Certainly when it comes to our business model, trying to go stream byproduct metals that are less, non-core to the operators is an easier path. And that oftentimes leads you to silver coming off of base metal mines, for instance. So it's something we continue to spend time on. It's a metal that we are quite bullish on as well. And that split of 70% gold, 20% silver, the rest other, that's probably the right mix for us for the long term as well.
Okay, super. How critical do you see the silver deficit, which we have now in the 3rd year? Yeah, and it's growing and growing and growing. Do you think that could be challenging for the future business, or do you think it maybe helps even because more and more companies might say, oh yeah, let's do a silver stream because there is something we really want to use?
Yeah, look, I think it's an interesting question. I think for us, silver's trickier. It's just, again, largely byproduct related. So as you see more interest in pushing base metal mines forward, the silver comes along with it. Oftentimes it's silver lead, sorry, it's Z. It's
silver, lead, zinc.
Yeah, exactly. So it's the lead and the zinc driving the silver. Sometimes it's copper related, which obviously is a big push out there in terms of decarbonization. But generally speaking, those byproduct metals suit us well. Those are conversations that suit our partners well. So we'll continue to look for it. But if there's just less and less to find, all that just ultimately drives a higher price. And we have quite a bit of exposure to it already.
Okay. As said, you have a super large portfolio, and I think the growth in your company for the next years is easily secured, with all the projects you have. But are you still evaluating new large gold projects, for example? Are you still, let's say, approached to do royalties?
Yeah, look, we're approached at times. It's interesting. We're approached more now than we have been in the last 2 years. There's people that we were trying to talk to that weren't receptive because they could raise equity dollars or they could raise cheap debt. Now all of a sudden, those people are re-engaging with us to see if we'll help provide that gap that they need. So that's a good sign. And we're always looking. We're not resting on the portfolio we have. It's tremendous. The fact that we can grow at a high single-digit CAGR, almost double-digit CAGR for hopefully the rest of this decade, but certainly the next several years on things that we already own is tremendous. The fact that we're a size of company that is big but not too big, where we can still do the type of deal flow we did last year in 2022 and add double-digit growth on top of that organic double-digit growth. That's quite special. So we're looking. Our thresholds are quite high. You know us from a geopolitical risk perspective. We don't venture too far. From an asset quality perspective, we're not trying to dilute what we already have. But we did have a busy 2022 in terms of finding good things. Our pipeline now looks equally good. And in a world where inflation's still a problem, it's certainly still a problem in the mining sector. And at the same time as that CapEx pie is growing for the miners, the amount of equity and debt that they can get is constrained. It's shrinking. So I think the royalty streaming sector will continue to kind of fill that void as we have for a long time.
Super. 2023. Which projects do you think will be brought online so that you can benefit? One thing. I think another thing is Victoria Gold looks now really, John, is really moving forward. So that will be also a higher royalty stream for you, or royalty cash, or let's say profit for you. More ounces delivered. So what are the projects for this year?
The good news, and you kind of touched on it earlier, our growth for 2023 is really kind of right in front of us. It's as low risk growth as you can get. Just to paint the picture, we went from 80,000 ounces in 2021 to 90,000 ounces last year. This year we're guiding to 95 to 105,000 ounces, so another 12% increase in the midpoint. And again, that growth comes from the expansion at Mantos that Capstone Copper has, which has been complete now for a while. They're just fine tuning it, so we expect those ounces to grow, those silver ounces to grow, as of Q2. It comes from exactly what you said, the ramp up at Eagle, and last year was kind of a sideways step for them. This year we think they can take the step forward that gets them to steady state, and the Q1 numbers they put out, the production numbers, they were quite good. So especially in the winter months, which is their toughest month, so that's a good sign for the year. And then we're just looking forward to closing the CSA transaction that we announced last year, which is us assisting Mick McMullen and his team to buy a $1 billion mine from Glencore. That's kind of right around the corner for us in terms of that conclusion. So that's what's driving us this year. Again, always a little bit of movement up or down between different mines. And then as we look forward, we have a lot of catalysts coming along. Whether it's the final investment decision for Hermosa, which is a South 32 asset in Arizona, whether it's all the talk at Malartic now that Agnico owns 100% of that mine, in terms of filling the mill, which will have 2/3 capacity at the end of this decade, the regional potential, all of that is a phenomenal story for us. And haven't even talked about the Windfall project, which is basically coming through permitting in our sister company, Osisko Mining. So a lot of good news, a lot of good news for a long time.
Fantastic. So what is, let's say, the financial situation of the company, meaning how much firepower do you have and how does it look like with debt, cash in the bank, marketable securities, etc.? What is the balance?
Yeah, look, the balance sheet is in exceptional health right now. We shored up our balance sheet last year by raising $250 million US in March last year, so just over a year ago. We paid off our convert at the end of last year. We had $300 million in converts that we paid off. So today we have 16 million Canadian of net debt. If you don't talk about the assets, I know when you think net debt, you talk about the assets, but just cash versus debt. We have most of our credit facility that's available to us for growth. We have 119 million in cash on the books. We had 175 million of cash flow last year. We'll have more this year, more ounces. Presumably, gold price will be higher on average this year than it was last year. So we have all the firepower that we need to continue to grow our business. The good news for us is we grow no matter what, which affords us a tremendous amount of discipline, but we're very happy that we kept our balance sheet ready for this part of the cycle and didn't over-lever in the last several years.
Fantastic. That leads to the most important questions, which I got from several shareholders. What's about the dividend? When will it rise?
I can't tell you when, but it certainly will. I mean, our dividend has only ever gone up. That will happen again. It's interesting. We've started showing a new graph in our, which I'm sure you'll pull up over this talk. But we've returned a third of every dollar of revenue, a third of every ounce of gold, basically, to our investors last year, and we've done that on average for the last 5 years. So it's very important to us. 2/3 of that was through dividends, 1/3 of that was through buybacks. But we'll continue to find the right balance of allocating capital, which for us means investing in new growth, increasing the dividend, buying back stock when it gets cheap, and just piling up cash on the balance sheet. So it's an exceptionally strong business. It's only strengthening, and we'll look for ways to reward our investors for that.
Super. Thank you very much. I love to hear that, as I'm a shareholder too. And wish you all the best. Thank you very much, Sandeep. And I have a good feeling that we talk quite soon.
Yeah, perfect. And thank you to your listeners as well.
Yeah, thank you.
Take care.
Yeah, ladies and gentlemen, it was Sandeep Singh, the CEO of Osisko Gold Royalties. You heard it. As always, the company is in perfect shape, has a super growth path. Even if they don't do one new project or one new business point, they are growing on double digits annually, probably for the next 6 to 7 years. And you heard it, probably the dividend will also rise. And the company is filled up with cash, filled up with firepower. They have the credit lines, they have marketable securities, a great portfolio of assets, and doing an excellent job. I only can congratulate, and you really should look at the company, because it was one of my best performing stocks in my portfolio so far the last 6 months. And I have a good feeling it will do well also this year. So thanks for watching us, and bye-bye from Switzerland.